You're listening to Police, the podcast from the Police Federation of England and Wales. To find out more, visit polfed.org. You can listen and download our podcasts via most podcast platforms. Simply search for Police, the podcast from the Police Federation of England and Wales.
Hello and welcome to this edition of Police, the podcast from the Police Federation of England and Wales. And today we're talking all things finance with Annette Petchey from MetFriendly. She's got some advice for officers right at the start of their careers and also officers right at the end of their careers. So there really is something for everyone in today's episode. So it's over to Annette.
Hello everyone, my name is Annette Petchey. I'm the Chief Exec of MetFriendly, which is the UK Police Family Finance Specialist. We have been serving police officers, police staff and their families for 130 years with information about savings, investments and the protection that police and police families need. A number of years ago, we took the decision to move away from only serving the Metropolitan Police, and we now cover the whole of the UK. We're seeing that a lot of people who work for the police or who are family members of those who work for the police are really struggling at the moment. We're about a year into a cost of living crisis. And even though police have just had a 7% pay rise, a lot of people are having mortgage rates coming up for review and finding that their mortgages are going up, their bills have all gone up. We're just about to enter winter again. And of course, everyone's turning their heating on. And we're finding from the MetFriendly Family Finance Index that police officers, staff and their families are beginning to struggle quite a lot in really distinct pockets. There are some pockets that are not struggling quite so much, but it's very clear that across most of the ages, we're seeing that there are a number of more people struggling with their finances than there were a year, 2 years ago. We launched the MetFriendly Police Family Finance Index, I think 2 years ago now, and we've run it every 6 months since then, and it effectively charts the finances of the police family. So everyone who fills it in provides us with an awful lot of information about their age, what force they're with, how they're feeling about their finances. And all of it is completely anonymised, but it enables us to pull together a picture of what the financial position is of all of the people who make the huge choice to serve society as a police officer or a member of staff. We've been able to see from the last couple of years that for most age groups, people are feeling more under pressure. We ask a mixture of questions in the survey. Some of them are very factual and some of them are very subjective. It's about how they're feeling about their finances, whether they're feeling optimistic, whether they're worried, what are the things that they're worrying about. And there are a number of free format areas where people have been very open with us about the choices some people are having to make with regards to, do they save, do they pay down a mortgage if they're coming close to retirement, or if they're a few years away from retirement and have family, do they take their family on holidays, do they turn their heating on, do they feed the kids, and making really, really tough choices that I think people who have made the choice to serve as a police officer, as staff, probably shouldn't be making, a quarter of the way through the 21st century. But I guess the advice that I would always give, it's not regulated financial advice, but it's the advice that my parents gave me. And it's about protecting what you have now. Always, always save, even if it's only a tiny bit. So my parents told me, I tell my kids, two savings pots always. There's the rainy day pot, which is easy access. It's for the bill that you weren't expecting, or the holiday that ended up costing slightly more than you thought it was going to, because all-inclusive never really means all-inclusive. For the boiler that needs servicing, for the MOT that didn't sail through, easy access, rainy day pot. Then also have a dream pot. The things that you want to save for, that you might know what you're saving for, you might not know what you're saving for, but always have a dream pot, money that you can't access easily. It's locked away, and the dream pot needs to be something that not only can you not access, but you have to really think about before you access it as well. So something that you're locking away for 5-10 years, so that you can really realise those dreams in the future. The rainy day pot, instant access. You can get some really good deals from high street banks, challenger banks at the moment, that provide instant access and actually not bad levels of interest. So absolutely do that. And then in between those two things, if you are really in a really good, or if you want to get in a really good savings habit, there are a number of plans out there, which MetFriendly and a number of other people do, where you save every month for 5 years, and you can take a rolling plan, and then after 5 years, or you can take it out a 10-year one, after that amount of time, every year you get a lump sum paid out to you. So things like that are really, really good tools for developing really good savings habits. So again, another thing, my parents sat me down when I was I think I must have been in my late 20s. And I was struggling a bit. I'd left home by then, quite a while before that, and I wasn't living a life of Riley, and I always, by the end of the month, I always felt that money was tighter than it should have been. So they sat me down and we just plotted everything that I spent. Everything, the money that I had in, everything that I had to spend on. So at the time, it was my rent, it was all my bills, it was my food, and then the things that I tended to spend money on as well. So I had some standing orders for things. I mean, I'm quite old, so at the time I didn't subscribe to any streaming packages because there weren't any available at the time. Whereas now we probably all have 1 or 2 streaming packages and things like that. And it's phenomenal how much we all realise we spend when we do that, because there are things like, so yes, of course, I have a Netflix and an Amazon Prime subscription. I've recently redone this exercise again because one of my colleagues challenged me to do it. And to be honest, I was horrified, because I think I'm pretty financially savvy. And yet I spend so much more money than I realise I did. We haven't watched anything on Netflix for ages. We occasionally watch something on Amazon Prime, so we're going to be dropping one of them. Don't know which one yet. And I was also surprised at how much money it looked like I should have at the end of each month. But then I was spending it on things like my coffee. I love coffee. So I'm working from home today. This is one that I've made myself. But I was buying too many takeaway coffees, and I do always take my own cup in. So, I end up getting bonus points for that. I shop. I cannot walk past a TK Maxx without going in. So in doing this exercise and in budgeting, it really helped me realise what I'm spending as discretionary spend, and I've cut that down a lot. So I'm now getting fewer takeaway coffees. I'm still getting about one a week, to be honest, because it's a bit of a treat and I like the routine of getting out and getting some air. But I've used what I've saved from the coffee, from the less frequent trips into TK Maxx, and from what I'm going to save from dropping one of the subscriptions to open a junior ISA for each of my kids. And I've set it up on direct debit so that I don't have to think about it. It's not a huge amount of money going into their accounts. I have signed up for an escalator, which automatically increases it next year. And it's going to increase it at a time that I know I'm going to be getting a pay rise, so I won't really notice it. So the tips that I would really say are absolutely know what you're spending and what you're spending it on. It's too easy to get into the habit of just recognizing that there's no money at the end of the month. Really think about your discretionary spend and decide, is that what you really want to spend money on? If it is, great. But if actually you could give up some of that and use it to save, either in your rainy day or your dream pot, then do that. And then the third thing is direct debit, salary deduction. Both of them are really good because you don't have to make that regular choice. You don't have to say each time, have I got a bit of money this month? Shall I put it in? You can, of course, if you set up a direct debit or you set up salary deduction, if you do find that you have a little bit of extra money at the end of a month, or some people will have a second job, if you get a bit of extra money in from that, you can top up. And then I guess the other thing is, I said that I've got junior ISAs for my kids. I've just opened those. There are some really good tax wrappers around products. So everyone who can should be saving into an ISA, because any growth that you have in your ISA is tax-free. So with my kids' junior ISAs, my kids are 12 and 14. So the 14-year-old, he won't be able to access his for 4 years, the 12-year-old for 6 years, and then they'll be able to carry them on as adults anyway. But that's years and years of growth, and it'll all be tax-free, so really efficient. And then the other really amazing tax-efficient product that most people don't know about is, if you are aged under 40, which sadly I'm not, if you're aged under 40, the government wants to incentivise you to save. So up until you're 50, they'll give you up to £1,000 a year to save into something called a lifetime ISA. And the reason they want you to do this is for two core things. One, to be able to get on the property ladder. And two, because most of us don't have enough savings for retirement. Now, police officers get a good pension, but it's nothing like what they get as salary. So even with the really good police pension, on retirement, incomes drop. And often officers will get a secondary occupation. Staff don't get the same kind of pension. So their pension provision comes from saving and from their employer's pension, but it's very different pension. The lifetime ISA, as well as getting you on the property ladder, is also designed to help you save. So if you want to use it for anything other than buying your first property or anything after the age of 60, the government will take back whatever they've put in on top. You get to keep, obviously, your own money and all the growth that's come in the plan, and it's all tax-free. But if you can lock it away, either until you've got you use it to get on the property ladder, or until you're 60, it's the only thing that will give you a guaranteed return of a minimum of 25%. Because so they'll give you up to £1,000. It's 25% of whatever you put in, up to 4,000. But you get all the growth on top of that as well. So you get annual and final bonuses, and it's phenomenal. Fabulous product, and no one knows about it.
Great advice there from Annette Petchey, who's the CEO of MetFriendly. You're listening to Police, the podcast from the Police Federation of England and Wales, and we'd like you to get in touch if you have comments or questions. Our email address is podcast@polfed.org. podcast@polfed.org. And now it's back to Annette, who's got some more information about some of the products and services on offer from MetFriendly.
most of us know that we need to save a bit more. So if you're not really sure about what you want to do, what you can afford to put away, we can help with that. We have a lot of protection, so mostly life assurance, income protection, and critical illness. Our products are very specifically tailored for police. So often critical illness, income protection, life assurance will exclude certain things. So if you're involved in a fray or public order events or riots, then and you get an injury or are killed, you might not be paid out. Now, of course, by definition, police officers are far more likely to be involved. So ours are uniquely designed not to hold back when that should, if that should happen. And then with our critical illness, if you're really early in your career as a police officer, in fact, if you're in the first 3 years, you can have it for free for the first 12 months, and then you start paying afterwards. But uniquely with our critical illness, if your claim, and it covers a number of things, but including loss of limbs, burns, things like that, HIV infection, if your claim comes about because of your duties, we double the sum assured just to give a bit of extra breathing space. And then MetFriendly is owned by its customers. We call them members. It's an old-fashioned thing to do with the fact that we're called a friendly society, but our customers are members of MetFriendly. We don't have separate shareholders, so absolutely every penny that we make either has to go back to our members in their returns or in the cover that we're able to provide, or we can use that money to provide services for the police and the police family. So what we tend to do for that is we really focus on helping people learn to budget. We really focus on teaching people what's actually going to happen at retirement. We run a number of webinars on pre-retirement. So just start people thinking about what they are going to be having, and then obviously on retirement as well. I'm going to spend a couple of minutes talking about two different officers. One's right at the start of their career, and the other one's towards the end, coming up to retirement. At the beginning of their career, they've probably been working elsewhere for a little while, so they've already established what it's like to be earning money. People aren't joining straight from finishing A-levels so much anymore. A few are, but not so much. So they've got into a habit of what it's like to earn money and be paying bills. But in the main, they don't have the large financial commitments that they'll have in another 5, 10, 15 years' time. They've made a really big decision to join the police. The police service is almost unique in that it is a real affinity. So it is a group of people that identify with each other because they have the same job. And that's almost unique. And with that, you get an awful lot of support from other people who have the same job as you in a way that you don't get in financial services. There isn't a group of directors in savings and investment companies that will go around making a point of helping each other. That means that there is a terrific amount of support around those officers. But what it also means is that quite often that new officer will get the benefit of lots of other people's opinions. And sometimes they're really good and sometimes they're not so good. So you might get people saying, oh, I've made a fortune on Bitcoin, on cryptocurrency. They might have done, but that doesn't mean that you're about to as well. My advice would be, don't focus on that so much. If you want to go and play with that a bit, do that, but know that there are real risks associated with doing it. Get in place early on some really good basic habits. And those really good basic habits will be, 1, save. really start that savings habit really early on. If you've just joined the police, you are very much likely to be under 40. Absolutely. Think about getting a lifetime ISA, because of that extra up to £1,000 free from the government if you're willing to use the money to buy your first home or to keep it until retirement. Absolutely do that. Absolutely look at a 5-year or a 10-year savings plan that for the next few years, you don't actually need all of that money, you're saving away so that when they start maturing at 5 years or at 10 years, every year you're going to start getting a payout that will pay for Christmas, it will pay for the holiday. And if you haven't got anything you want to do with it, you then just put it into another savings plan and lock it away for a bit longer. Look at protection as well. You get good death in service with the police. So unless you've got a mortgage or are thinking of taking a mortgage now, you might not need to be thinking about getting additional life assurance. You get you get very good sick pay with the police. It runs out after a while. You could be looking at an income protection. If you're not looking at an income protection, absolutely look at a critical illness plan. And as I said, the one from MetFriendly, it pays out double if you end up having to claim because of something related to being on duty. Absolutely look at all those things, but above all, I would say get into that savings habit and always check your budget. Keep coming back to it and keep asking yourself, do I need to be spending this? Do I need to be spending this? But also enjoy your money. I mean, you earn money because there are things that you want to do. So enjoy your money. Don't squirrel away every penny that you can saving, because you'll end up begrudging it and you won't keep that savings habit going. So at the beginning of the career, this officer who's just starting out, it's all about preparing for the future. Prepare for the future while you can afford to. At the end of an officer's career, there are some really important things that are going to happen. So first, their income's about to drop quite considerably. But second, they're still young. So they have a really good opportunity to continue earning. And third, they're about to have a choice about receiving either a lump sum or a higher monthly pension. So really think about, when you're making that choice, really think about what you need to do with your money. Now, this officer at the end of their career, with any luck, a year or so ago, they went to one of our pre-retirement seminars, and they've already been thinking about this. And because they've already been thinking about this, they've got some good ideas about what they're going to want to do with their money, what they're going to want to do with their career post police retirement, and may have already even got a few feelers out for some roles. The period between police retirement and state retirement can be a really good time financially for officers, and we see that coming through on our police family finance index, because police officers have a terrific skill set. So not only have they had a number of roles, but a commitment to one employer over a long period of time, but they've also learned an awful lot about being resilient, about sticking at a job, about really being tenacious in their delivery at work. They make really good employees, and there are a lot of companies that really like to employ ex-police officers. One of the things that we do, and that we've recently heard from the PFEW conference is going to end up being part of the covenant, is that officers, as they approach retirement, they'll get support on how to write their CV, how to position themselves. That's a fantastic thing, because most of us love employing ex-police officers for all the skills that they bring and all the or their approach to work. So that's a really good period to be able to save in. So not only is this lump sum coming through that you might want to think about locking away for 5, 10, 15 years, but there's also the income that this officer's going to be getting from their second career on top of their police pension. So there's that ability to save on a monthly basis as well. Because trust me, when they retire fully from their second career, that income really drops quite dramatically if they haven't been saving for the whole time. And we really see again on our index, we really see that it takes a while to adjust to that if they haven't been able to plan for it and if they haven't been saving during that period that can be really very good for them. So early in the career, plan. Post-police retirement, reap the benefits of the planning, and then plan for the full retirement from both state and police retirement. People who are really struggling financially at the moment need to do a couple of things first. Really go through their expenditure and really look at, do I need to spend on the things that I'm doing? We have so many discretionary spends that we have just become used to, that it's really important to look at that and look at what direct debits and standing orders are set up and think, am I using that? Do I really need that? But don't just look at a statement that shows you what you did last month. There are quite a few that might be set up on a quarterly or an annual basis. Subscriptions, you can pick up your phone and check your subscriptions. Don't get caught out by an annual subscription that comes up for renewal, because once it's gone, and you probably don't have the time to engage with the company and say, I didn't mean to, can I get a refund? And that's an awful way of losing out there. The second thing I would say is, don't stay alone on it. There are places that you can go for help. If you are really getting into a lot of trouble, talk to your bank. If you have a mortgage, talk to your bank and get it restructured to get the cost of it reduced. If you have loans, do the same. Don't hide from it. The absolute worst thing that you can do is not acknowledge that there's a problem and hide from it, because it just gets bigger and bigger. And the other thing is, I would say, is do not go into payday loans, using your credit card, because you will just end up getting into terrible trouble like that. The payday loans they sound fabulous because they just bring forward your payday, but it just puts a longer and longer gap in between now and the next one. So if you are really struggling, really budget, really look at your discretionary spend. Talk to your lender if you have any lending, and get that restructured. And please resist the temptation to use very short-term, very expensive lending. It will come back and bite you, and that will be terrible. If you would like to get in touch with MetFriendly, if you'd like to hear more about what we do, how we can help you save or protect things, then there are lots of ways of getting hold of us. The best way is to go to our website as a starting point, metfriendly.org.uk. You can book into any of our webinars. You can email us, info@metfriendly.org.uk. Or if you want to have a conversation with someone, we always have people ready to talk to you during the day, that is, not always. Don't try to call us at 2:00 in the morning, please. We won't be there. Our number is 01689 891 454. We would be delighted to hear from you.
Thanks very much for listening. To find out more, visit polfed.org or email podcast@polfed.org. This podcast is brought to you by the Police Federation of England and Wales. Have your say. Contact us via most social media platforms. Simply search for Police Federation of England and Wales. If there's an issue you'd like us to feature, then email us via podcast@polfed.org.